Is the inventory market headed for every other crash? Not probable, however, extra volatility ought to be ahead, specialists say. The sell-off on Wall Street resumed Thursday following a wild stretch that noticed shares gyrate from their worst three-day hunch given that June to their first class day in almost 3 months. The sharp drop-off that started final week has erased 6.7% from the S&P 500, which had simply reached a document high. On Wednesday, the large index bounced lower back and rallied 2%. Its exceptional day due to the fact that June 5th, convalescing a little extra than a quarter of its losses from the prior 3 days. But the bears had been returned Thursday. Still to be decided is whether or not the sell-off quantities to tech shares taking a breather after an ancient run, or if the establishing of an extra giant downturn. Experts, however, assume to see volatility pick out up in the coming months. As the election nears, we may want to see this endured volatility continue. Bert White, Chief Funding Officer at LPL Financial, stated in a note, "The Nasdaq Composite, which homes many science shares that led the market's top-notch 5-month comeback from its lows in March, temporarily misplaced extra than 10% through Tuesday after putting an all-time excessive closing week, a decline recognized in the market as a correction. The 3-day rout was once the quickest such pullback on record, in accordance to LPL Financial. So, should shares face every other bout of turbulence in the coming months, or be headed for any other sharp downturn? Here's what specialists say. What drove shares to records? The inventory market staged an attractive turnaround to all-time highs remaining month, propelled through big tech as trillions of greenbacks and stimulus-useful resource from the Federal Reserve and Congress helped prop up an American economic system gripped by way of recession. Hopes for an attainable COVID-19 vaccine additionally helped the S&P 500 erase all of its almost 34% loss from before in the pandemic. But for some investors, the rate of tech shares was once too excessive in contrast with the revenue they had been generating. Other industries didn't get as costly as science all through the current run up. Banks and different monetary shares in the S&P 500 are nonetheless down greater than 19% for 2020 so far, for example. The today's pullback is healthy. There was once a little too a hold to hysteria, says Brian Lee, Chief Funding Officer at Blue Zone Wealth Advisors. The inventory market has had a sturdy recovery. However, to a positive extent, it is being a bifurcated market led with the aid of technology. Now we're beginning to see a broader recuperation in different beaten down sectors. In the inventory market rebounded the files at a time when the US financial system is in one of the sharpest financial downturns considering the Great Depression. Still, company income reviews for the spring that were not as disastrous as anticipated additionally helped carry the market. That's mostly being helped in section with the aid of high-flying shares like Apple, Microsoft, and Google, Dad or Mom Alphabet, which have powered this year's rally, some distance outpacing the relaxation of the market. As buyers guess closely, they should succeed in a stay-at-home economy. What's pressuring the market now? Big tech makes up an outsized element of the S&P 500, and the overall performance of the largest shares can have a disproportionate impact on the index. The 5 largest US corporations, Apple, Microsoft, Amazon, Alphabet, and Facebook, make up about 25% of the S&P 500. Much of the act over the previous few buying and selling classes has been focused in the names that drove lots of the current rally, as the 6 biggest technological know-how names consisting of Apple, Microsoft, Amazon, Alphabet, Facebook, and Tesla shed $1 trillion over the 3-day sell-off. Between March 23rd and September the 2nd, the Nasdaq jumped 75%, whilst outpacing the S&P 500's 60% attain and the Dow Industrials 56.5% rally in the course of the inventory market's rebound from its pandemic lows. During the run, Apple grew to be the first $2 trillion US organization, and Zoom itself grew to be well worth extra than General Motors and Ford combined. Last week, Apple and Tesla cut up their shares, making their shares extra less expensive, as hundreds of thousands of Americans are scooping up shares for the first time on buying and selling apps such as Robinhood. What dangers lie ahead? The inventory market pullback got here on the heels of a historical run, with the Dow and S&P 500 each notching in their fine August in greater than 30 years. But shares ought to face stress on account that September is traditionally one of the weakest months for the market. Still, shares may want to notch extra beneficial properties in the coming months, analysts say. One key reason: investors are having a bet that the pandemic will stop subsequently with a vaccine, but any setback in the timeline for creating it should venture the inventory market's rebound. Professionals caution. With the US presidential election much less than 2 months away, some buyers continue to be cautious due to financial coverage uncertainty. Renewed exchange tensions between the US and China have delivered to these issues after each nation's reached a deal in January that added a truce in a tariff war. Investors are additionally ready for extra monetary useful resource of the unemployment advantages and different stimuli that Congress have passed beforehand expired. Investors say such stimulus is vital to the economy. However, partisan disagreements have Congress at an obvious impasse. A Senate vote this week on a trimmed-down alleviation package deal proposed by means of Republicans has solely a slim threat of passage as Democrats insist on extra sweeping aid. Still, wealth managers advocate long-term buyers to continue to be the course. Retirement money are long-term investments, and traders can make errors when they strive to make temporary predictions, says Jeff Bush, managing associate at Informed Family Financial Services, a financial advisor in Norristown, Pennsylvania. Investors are rewarded for their time in the market, not timing the market. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.